morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look at the global markets and what happened there. Most of the American markets ended with a positive bias, up almost close to 2%. Europe was flat in trade, but the traction is pretty strong as far as the Asian market is concerned. The Nikkei is up almost 1.3%. Hong Kong, China, all of them doing well in trade. And so is the SGX Nifty, because the SGX Nifty is indicating a gap up of almost 71 points at this point of time. How did the ADRs pan out in trade? Dr. Reddy's was down 4% post the 8 observations in the firm 483. Wipro, ICICI Bank and HDFC Bank were also down in trade. What has done well was Vedanta and Tata Motors, which come out with numbers today, and Infosys was up almost 2.5% in trade. How did our markets pan out in trade? Nifty was down 0.5%, but there was traction on the mid-cap and small-cap end of the market. Similar was the case. The Nifty Bank was weak, but the Nifty PSU Bank managed to move up much higher, and the Nifty Bank was weak on account of the HDFC twins. Now, if you're seeing at what's happened as far as some of the sectors are concerned, IT and media continue to do well. Both of them were up over 1.5%. The other factor is the fund flows. FIs remain net sellers, DIs remain net buyers in our market. But if you're looking at how the Nifty managed to shape up, the Nifty was down 50 points. Basically, the HDFC twins, Reliance and ITC, the heavyweights contributing on the negative side. What provided support was HUL, Infosys and TCS. SBI also provided support, and that's why the Nifty PSU Bank Index was higher in trade. Now, there was long unwinding that was seen both there was long unwinding that was seen both on the Nifty as well as Bank Nifty. Open interest was up down 1%, and for the Bank Nifty, open interest was down 5% on the Bank Nifty. Now, if you're looking at where positions are taken, 10,000 is the biggest support, and 10,200 is now becoming the immediate support. The SGX Nifty is indicating we will open close to the 10,300 mark in trade. So what we will see is that the red lines probably will go in higher, and the green lines probably and the green lines will go in higher, and the red lines will come in lower this time around. As far as what happened in trade yesterday, it was the call writers that actually wrote in at 10,300 and put writers that wrote in at the 10,200 mark in trade. So it seems like it will be range bound, but today we are looking at a positive bias for the Nifty. The Nifty PCR, the Adani Power is the only stock in the FNO ban. The Nifty PCR remains stable. The Bank Nifty PCR managed to come down again below the 1 level mark in trade. A couple of stocks I want to highlight. First of all, it's Voltas. It saw open interest build up of 25%, was flat in trade, but nevertheless there is open interest build up that is seen on the counter. The other few counters that I want to highlight is Just Dial came out with strong set of numbers. Open interest up 17%, and the counter moved up almost 12% in trade. Dalmia Bharat was trading at 52-week low, but yesterday there was heavy accumulation on the long side for Dalmia Bharat. And finally, the last stock is Dewan Housing. Look at the short covering that's come in. Open interest was down 10%, and the counter managed to move up almost 11%. So these are all the domestic cues for all the. Let's go across to Paul Allen for all the top international headlines.
South Korean industrial output fell the most in 9 years in September. Factory output tumbled a larger than expected 8.4% from a year earlier. The poor figures add to concerns that South Korea's economy is losing steam. The numbers also complicate the central bank's plans to raise interest rates as soon as November. JP Morgan boss Jamie Dimon says the US and China are moving closer to an all-out trade war, and the tariffs have already damaged the Chinese economy. Describing the current situation as a skirmish, he says the actual tariffs are small, but the wider effect is diminishing confidence. Dimon says business isn't sure about supply lines and whether relations will take a dramatic turn for the worse.
The trade skirmishes, the effect of tariffs themselves is very small. But the secondary effect, oddly, is far bigger. So the secondary effect is confidence. You got to change supply lines. Will it get worse? What's the odds of a trade war? What's the odds of something going south? What's the odds of a bad retaliation? So that's what causes a lot of, that is actually more negative than the effect of tariffs.
The Italian economy unexpectedly stalled in the third quarter, showing no growth for the first time in almost 4 years. The news came as a blow for the populist government's expansionist plan, and ministers acknowledge it could be a problem. Italian bonds fell after the preliminary numbers, which leave the nation as the underperformer among the Eurozone's major economies. Boeing officials are in Indonesia to help the investigation into Monday's Lion Air crash. Search teams still haven't found the plane's data recorders, which may explain why the 737-8 came down soon after takeoff. It was the first crash involving the new MAX series jet, and the Lion had only been delivered in August. Cockpit recordings suggest the pilots faced a problem almost immediately. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Stock of the day is Coal India on account of the OFS that opens for subscription today for non-retail investors, and for retail investors it's on November 1. Let's get into the details first, where the issue period, as I mentioned earlier, initial offer is for 3% of the equity. If that is subscribed, or rather just put it, if that's oversubscribed, we have a green shoe option of 6%. Overall, 9% of the stake will be offered if it's oversubscribed, and the floor price will be 266, which indicates a 3% discount from the current market price. Given also, bear in mind the fact that the stock already dipped in 3% yesterday, effectively we're looking at a 6% discount from day before yesterday closing price. What it brings in and how will this work? Well, the allocation could be at or above the floor price for non-retail investors. For retail investors, they can bid at the cutoff price, which could be lower than the floor price, and 20% of the offer size would go to retail investors. Mutual funds, insurance company cannot hold more than 25% of the overall OFS, and it helps achieve two purposes. One is the divestment target that the government has set out, and also the company would be able to subscribe to that minimum 25% of the public shareholding norm. What do brokerages make out of the development? Now, both Macquarie as well as JP Morgan, they've subscribed subscribe for the OFS at an attractive price. For Macquarie, this divestment removes the overhang, and for JP Morgan, this comes as a relative safe haven in the volatile market situation. Look at the shareholding pattern currently. You have the Government of India, which holds 78%, LIC, which holds under 8.33%, and then you have public holding, which currently stands at around 13.12%.
Well, as far as the commodity space is concerned, well, first of all, crude oil prices, they have fallen to a 2-month low as global demand continues to be concerned with respect to trade tensions between US and China. Crude oil futures declined by 1.3% on Tuesday as the United States prepares for another round of tariffs on Chinese imports if talks between the presidents of the two countries falter. That, along with US crude stockpiles rising, has kept the crude oil prices in check. As far as the base metal space is concerned, all but nickel closed lower on the LME, led by sharp cuts in excess of 2% in zinc and copper, as concerns over the trade wars have clouded the demand outlook for the industrial metal. On the other hand, gold prices are set for their first monthly gain in the month of October since March. They are up. Gold prices are up close to 2.5% in the month, which is the highest since January.
In a few words, volatility and more volatility.
More volatility.
Yes, absolutely. I think, as you rightly pointed out, 2017 was a year when you had a bull market in equities across the world, including in India. We had a fantastic year. 2018, Feb, March told you that volatility can re-emerge, and it did. And then we forgot about it in April, May, June, July, and August, until we got to see it again in September, October, not just here, but across the world. My sense is that investors are slowly waking up to the possibility globally that growth could slow down in the next year or two. And there are reasons for this. One is the trade tariff issues. I think initially people did not pay enough attention to it. And for some time I thought that, people should be focusing more on this, because this has the ability to eventually slow down global trade, disrupt supply chains if the trade tariff issues intensify. And all of that could have a chilling effect on global growth. And now I think I see a lot more mainstream, news articles and opinions implying that, yes, that could be a potential cause for concern, unless it is resolved in the near term. The other is that the trade tariff issues did lead to some currency volatility, and you could see more of it, as some countries that are affected by it look at the potential for some degree of currency depreciation to blunt the impact of the higher trade tariffs. And often currency volatility can then spill over into equity and bond markets, and then that has its own set of variables and other factors that come into play once you have higher currency volatility, then affecting bond yields and stock price valuations and so on and so forth. So I think if I look out over the next 6 to 12 months, my sense is that the trade tariff issue could continue to be a leading factor in contributing to this elevated volatility in the markets.
Well, in stocks and news today, we start with Tata Steel, where we understand that Brussels is going to look into a net investigation in Tata's planned merger with ThyssenKrupp, and the European Commission says that the planned merger to cut competition, and well, this possibly could be a concern for Tata Steel going in. But in terms of other news, we also understand when it comes to Dr. Reddy's Laboratories, it's received a Form 483 observation for its Visakhapatnam facility, and it's made 8 observations in this particular form. Moving on, when it comes to Punjab National Bank, the government gets exemption from SEBI from making the bank's open offer, and the proposed acquisition by the government is around 5.83%. Moving on to earnings then, we've seen earnings from Pidilite Industries and lower than expectations, at least as far as the top line is concerned, which rose by around nearly 15%, but margins have come off quite substantially on a year-on-year basis, and consequently profits have fallen by as much as 8%. Coming on to Tata Global Beverages too, once again we've seen subdued revenues, where revenues just moved up around 4%. Margins came off quite substantially to around 9.5%, as against well over 12% year-on-year, and profits were up as much as 18%. And finally, Bank of Baroda, that's an important one, because we did see your net interest income rise by as much as 21%, is the same for net profit, which rose around 20%. Your net interest margins expanding to around 2.6%, so good earnings for Bank of Baroda. That's what we have in terms of stocks and news today.
For Tech Mahindra, the opportunity is in educating and teaming up with a partners ecosystem that we could address this market not by purely throwing in hardware, but actually by cloudifying the network, right, by software-defined network. So I think it's going to be interesting, and I can only tell you that I have never been more excited in terms of the opportunity, and the opportunity because we are approaching the market very differently.
I have to ask you about the breakup of your margins, and if there is a possibility of a continuation of expansion going in.
So first let me address the breakup question. So if you look at the breakup, clearly currency is about 80 basis points improvement. I think there was no visa cost. Usually we have visa cost in Q1. Right. So that was about 60 basis points, so about 140. The balance, about 140, came from operational improvement and mix changes and all the other things we did in the business. And then we had a wage hike for part of our employee base, which was a negative of 40 bips. So, and if I go back, and we had said this even last year and last quarter, that we do believe that our journey of EBITDA improvement is driven by some fundamental changes we are doing in terms of automation, in terms of new age delivery, in terms of looking at more synergies, managing yields better. And there's always a natural kind of movement as you grow more digital. I think there's a better yield and better margins. So I think all of them seem to be headed in the right direction, and so I would expect as a base case that the margins will continue to gradually improve over the next 2 quarters at a minimum, and then we'll see from there.
Okay, the big number for today will be Larsen & Toubro, which will announce numbers after market hours today. What are we expecting? We are seeing growth up by almost 10% on the top line. We are seeing profits fall down by 10%, and this is mainly on account of an exceptional item that the company had in the last quarter. This time also around, we are seeing lower other income and higher depreciation, and that will lead to a drop in profits. EBITDA, we are seeing a growth of 13%, which means EBITDA margin will be stable at close to 11.5%. What are we seeing? There is healthy growth that is seen both on the domestic market and the international market. Their core business, that is EPC, that is doing extremely well. Some of the sectors that will perform for them will be the hydrocarbon sector, given the fact that how crude has managed to pan out. Defense sector, that have been a lot of orders. So this is something that will aid the company as far as the second quarter earnings is concerned. The other factors is that lower other income this time around and higher depreciation will dent profits. Order inflow, we are anticipating close to almost 40,000 crores loss to come in. Remember, post the first quarter, the management had indicating that orders will be front-ended this time around. So expect more orders to come in the first half of the year. What have they guided? On the top line front, they have guided for revenue growth of 12 to 15%, and the order inflow guidance was kept at 10 to 12%. So we'll need to know, watch out what the company does and whether they revise the guidance, because over the past few years, post the second quarter, the management has actually always managed to cut the guidance. So it will be important to see what the management says in the conference call, which will come out with numbers, which is their post-market task today.
Well, it could be a second muted quarter for Tata Motors, given the fact that the JLR entity has seen decline in volumes. So the China JV volumes, we have seen a 20% decline in the second quarter, and that will lead to a sharp downtick in the overall margin picture. Not only that, because of higher discounting and clearance of stocks, we could have some adverse impact coming in on the EBITDA margins for the consolidated entity. But let's talk about Tata Motors, the consolidated entity preview. We're expecting a revenue growth of nearly 3%. Revenue seen at close to 73,000 crores. EBITDA seen close to 6,500, 6,600 kind of range. That will be a decline of nearly 27-28% on a year-on-year basis. And similar is the case with the margin picture, which is expected at 9% for the consolidated entity. That will be almost a 400 basis point decline on a year-on-year basis. More importantly, this time the consolidated entity is expected to post a loss of 874 crores versus a profit of nearly 2,000 crores on a year-on-year basis. As I was mentioning earlier, JLR has seen some strong decline in volumes, and not only that, that would be impacting the overall margins. Revenues for JLR entity seen down by nearly 10%. Losses for JLR are seen at close to 100 million British pounds versus a profit of 253 million British pounds last year around. And margins also for JLR seen at a muted 7.6% versus a level of 11.8%. Also, remember one fact, brokerages are expecting the forex losses for JLR and the consolidated entity to be in the range of 150 to 200 million British pounds, and that would be something that will be impacting the profits, and we'll be watching out for that one. Apart from that, the management commentary as usual on JLR demand, especially in China and US, is something that we'll be watching out for apart from the earnings this time.
Well, we're not expecting great set of numbers coming in from Vedanta. Operationally, we're expecting a flat quarter. Top line growth, first we're looking a downtick of more than 5% year-on-year basis on consolidated level for the company at a number of 20,000 crore. EBITDA is seen up by as much as 2% to a number of 5,777 crore. Margins are seen expanding to 28% versus 26%. However, the profitability of the company is seen down by as much as 35% to a number of around 1,350 odd crore. What goes behind the making of the numbers? Well, operational gains that we expected to see in oil and gas and power business are expected to be negated by the kind of decline that we could see in Zinc India and aluminium business, where higher alumina and coal cost combined with lower LME prices are expected to weigh down on aluminium business. You have just a lower volume and the prices, basically the realization, weighing down on the Zinc India business. Zinc International business is also expected to be weighed down by the lower production at Scorpion, and copper business performance is expected to see a downtick on account of closure. Higher crude oil prices, however, expected to help maintain or rather enhance the profitability of oil and gas business. Key things that we like to keep an eye out will be the progress of a 1.25 smelter, the base metal price movement, and apart from that, the petition that Vedanta has filed in for a hike in import duty of aluminium. Apart from that, we'll also keep an eye out on anything that comes on lines for the acquisition of Electro Steel, given that Renaissance Steel has allegedly said that the company is ineligible for Electro Steel bidding.
On Tuesday, at an event in Brooklyn, New York, Apple took the stage to announce 3 new products. The highlight, the new iPad Pros. They have larger edge-to-edge screens like the iPhone 10. They remove the home button and the headphone jack. There's a new gesture-based interface like the latest iPhones, upgraded cameras, as well as a new Apple Pencil, in addition to a new keyboard attachment that covers both the front and the back of the device. However, they are a bit more expensive, starting now at $800, about $150 more than the previous models introduced last year with slightly smaller displays. For Mac users, a lot of love went to some of the more older products, right? The MacBook Air, which was last revamped back in 2010 under the watch of Steve Jobs, was revamped again with a Retina display, so a higher resolution screen, faster processor, and it's now quite a bit thinner and lighter. It's a very popular machine that I think is going to sell very well this holiday season. Another Mac that needed a lot of love and attention is the Mac Mini, and for the first time in 4 years, that device, a desktop geared toward professional users that doesn't come with its own screen, keyboard, or mouse, was updated with much faster processors and a new graphics engine. It also comes in a new space gray color that really should be beloved by professionals. I'm Mark Gurman for Bloomberg News in Los Angeles.
Now, here are some stories that you'll find if you log onto the website bloombergquint.com. As of now, State Bank of India has halved its daily cash withdrawal limit for certain debit card holders, which will be effective from today. The new withdrawal limit of 20,000 rupees a day has been set on SBI Classic and Maestro debit cards. Customers with other SBI debit cards can continue to withdraw higher amounts from ATMs, though. And President Donald Trump's assertion that he can unilaterally end birthright U.S. citizenship is likely to meet stiff resistance in the courts. The Supreme Court had said more than a century ago in the U.S. that with a few exceptions, the Constitution automatically grants citizenship to all children born in the U.S., even if their parents aren't citizens. Now, although a handful of legal experts say that Congress could pass a law to change that rule, that's a far cry from the president's assertion that he can do it with an executive order. Do stay tuned over the course of the day for all the live market action. It looks like it's going to be a bounce in the green for the Indian benchmarks, at least, going by what's being seen in Asia this morning. Thanks so much for watching. As always, this is Bloomberg Quint.